Thank you for joining me. I'm Alex, and I would like to have a look at UPS today because Ali's World of Stocks did a portfolio analysis of Bill Gates' portfolio, and he apparently owns quite a bit of UPS, and I was wondering if that was a reasonable idea. Or rather, if that would be a reasonable idea right now, because I can't very well go in the past and buy it. So what they do is parcels and also service. So they mainly just do delivery. Current price $123, which gives them a market cap of $106 billion, which is quite significant. Dividend yield 3% with a 66% payout ratio, which is definitely not terrible. Current revenue $72 billion, earnings $4.8 billion, definitely not bad. PE of 21, which is kind of like borderline, but I think the dividend makes up for that. Total assets $50 billion, total liabilities $47 billion, which gives them a total stockholders' equity of $3 billion, which is not great. It's definitely not great. It's up from $1 billion and even less before that. But I'm going to give a little bit of goodwill here and say that is reasonable because it's going in the right direction and reasonably fast. But I kind of don't like where they're basically scraping the zero. Better than being negative, obviously. But what does the future bring here is the giant question, I suppose. And I don't think that delivery companies are really going out of business anytime soon. And UPS, being the biggest of them, obviously is around to stay. So I don't think they have any major risk factors because all the major risk factors are already here right now. So biggest competitor in America is FedEx. Then you obviously have DHL internationally, and there's a few others. USPS also a big one. But beyond Amazon kind of doing their own thing and kind of just delivering their own packages themselves, I don't think there's any risk factors that are going to materialize in the future that are not here right now. So in total, I don't think that this is really a bad company to invest in right now. Balance sheet, as I said, barely there, but not terrible. PE is reasonable. I mean, it's slightly high, but it's really not a problem. Dividend is pretty nice. I mean, currently you can get a few companies that pay out far more than that. But you kind of have to weigh how stable the company is, what the future holds with what the dividend yield is. And I think that UPS kind of strikes a very nice balance there because they're going to be around. They're making some good investments right now. They have a good plan for the future. And I think that with online shopping going the way it is and continuously growing, I think that the delivery services obviously are going to play a big role in the future as well. So to sum that all up, for a growth investor, I don't think UPS is really the good stock right now. But as a dividend investor, I think that you can make a good case for buying UPS because good payout ratio, decent dividend yield, very steady business. And for a value investor, the PE is slightly high, but that more gets weighed out by the dividend yield, the payout ratio, the growing revenue, and the balance sheet going in the right direction. So I think that it's really a good stock to hold long term because of the growth of online shopping. And I think that with a stable business, I think that it's a good stock to hold long term. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.